Hi, Larry Gaines, PowerCycleTrading.com. In this video, I want to go through a really nice looking trade setup on Amazon. So when I'm looking at a trade that has potential for a big, strong, powerful breakout up to upside or downside, and I want to define risk trade, I usually, the first one option strategy I'll look at is just a vertical call debit spread. Okay, so the reason to use a vertical call debit spread is it's going to be a defined capped risk trade, but it's going to give you a nice potential profit. Plus, it's going to help you to keep your theta decay a little bit lower than if you were just go long outright calls. So first off, the setup here looks really good based on our trading model that we use. That's based on momentum. So if you look here, this is Amazon currently today, the 25th of November, and we've got right here below, you can see our momentum indicator cycle 1, where my pointer is in cycle 2, have gone positive. So this is what we use for direction. So the momentum on the daily, or I call it the medium-term time frame, has now shifted up to the upside. So we've got positive momentum. So potential probability is direction to move up. Then I want confirmation on that. So I want alignment with lower time frames. So the 4 hour here, you can see that cycle 1 and 2 are positive. And then if I show you my other time frames, my multi-squeeze alert indicator, it's all showing positive momentum on the other lower time frames. Let me show you that. So here you can see the 60-minute is green. That means it's positive. 2 hours positive. 4 hour daily are positive. Now the other thing that looks really attractive on this is what we call a volatility squeeze. So a period of price consolidation, and when it triggers up or down, it has potential for big explosive moves. So you can see here below the 4 hours in a volatility, we call it a volatility compression squeeze. That's in a squeeze. The 2 days in a squeeze, 3 day, 4 day, weekly, they're all in a squeeze. So this has potential for a big move up or down. Right now, the momentum though on the 62 hour, 4 hour daily is pointing up. So the probable direction I'm looking at is to the upside. Now, a couple other things I'll look at directionally are what we call moving average crosses for potential momentum as well. So let me point those out. So here you can see on the 4 hour, we've got this blue arrow. That's a moving average cross. And then the orange arrow is also a moving average cross. So it's a 513 cross, 821 cross. And you can see we've got a cycle reversal here and these really great potential moving average crosses. Now, the next thing I always do is I call it mapping out. I want to map out where the potential price can go to. So first target will be right about here. You can see the price action through here is about 3,200. Then the next area of kind of resistance would be right here, this 50% retracement level coming in at about 3,220, and then up here to 3,300, that area there, and then potentially higher. So let me show you one more thing. These volatility squeezes are super powerful. So let me go back and I'll show you an example of one that just happened on a 4 hour time frame. So this was a squeeze back in this was August of 2014 right here. So you see how tight that price pattern is, and then the dots here represent when the squeeze starts and when it ends. Now you can see the same situation. The cycle 1 momentum and 2 are positive. We're getting these crosses here on the moving averages, and then you can see it broke to the upside. So it went from like 3,230, this area, all the way up to over 3,500. So these have potential for big power. So the way I like to do this first is to set up a call debit spread, define risk, and then if I want, I can convert it to a long call condor. Let's take a look. So this trade we set up this morning at PowerCycleTrading.com. So this is what we call alert trade sent out by our alert service. So what we did, we were trading right around here at 3170. We went long the 3195 call, sold the 3200 call. All right. So the thing is that using a call debit spread, we can keep our theta decay smaller than if we just go long the outright calls. So with this trade, we set this up for about $1.90 or 93, and it's kind of bouncing around here. It's around 215 right now. So we're up a little bit here, but the next thing I'll look to do is I look for at least a minimum of a 1.5 to 1. So risking, say, $1 to make $1.50. So if we make max profit on this trade, it's a $5 wide vertical spread. So 3,200 minus 31.95. So that's a $5 wide spread. The cost is $1.93 or $193. So the potential max profit here is the difference of 307. Now, if we keep 307, this would be for expiration next Friday, the 27th. If we keep $307, then that's going to be 159% return. Okay, so that's my kind of a minimum 1.5 to 1. Now, the other thing I like to do is that if we get a big burst pop to the upside, say next week or maybe even Friday, what I like to do is potentially convert this to what we call a long call condor by selling an out of the money bear call credit spread, typically a 20-25 delta short strike against it, converting this to condor, which will then reduce my capital at risk, plus also give me a better theta decay. So let's take a look at that. If I did that at that point in time, it would look something like this. So the market closed, the prices are a little bit off, but I would look to sell like a 20 short strike delta, and so that could be, I could sell the 33.35, then buy the 33.40, so bear call credit spread, or I could go up a little bit higher. So you can see here, then if I did this and I brought in $1, all right, credit, now my risk goes from the 193 down to only $93 based on bringing in that credit. I've got a huge profit zone here. And then next week at Friday on the 27th, if it goes out between the two short strikes here, between 33.35 right here and the short strike of the debit spread 3200, this trade will be up $407 on the risk of only 93, giving you a huge return on your capital at risk. So that would be a return of about 437%. And the other thing that this does is brings in more positive theta. So we've taken our theta decay from the call debit spread. If we're in that, we got a positive theta of about $1.70, but this increases that to $8.39. So it's a really great strategy for a lot of various reasons, but it's a really defined risk and a great for a big upside move. So if you'd like to learn more about these types of trades, option strategies, please come join us at powercycletrading.com, and good luck trading.